Welcome to this week's video, where I discuss what I believe is important for individual investors to focus on over the coming 5 to 10 business days. This week I'm going to be talking about ideas or themes that I think the market is focused on to kind of give us the direction as to where things are headed. And one topic that I think many people would feel the market is focused on, but in my opinion, it is actually not. Stay tuned. Over the next 4 to 6 weeks, the market is going to be really honing in on corporate earnings. We've already seen earnings from the likes of Delta Airlines, Citigroup, JP Morgan, Wells Fargo. We're going to get some reports out of other major banks out of the US, followed by tech stocks, retail stocks. And I think the market is looking for how these companies have been faring over the last quarter, but also what do they see going forward. I think everybody's aware that interest rates are going to rise this year. How will these companies handle higher interest rates? How will these companies fare with supply chain issues? Have these supply chain issues started to get better? Are companies starting to get some materials, some of their goods? Will they get back some of their labor force? All this is good information for individual investors to focus on to really get a handle on how corporations are faring today and how they will fare going forward. A second point that I believe the market is focused on is the 10-year government bond rate. Now that's something a lot of individual investors really don't pay much attention to. However, in the United States, the 10-year government bond rate has soared to almost 1.8%. Here in our country, in Canada, it has also moved significantly higher. This has actually spooked a lot of individual investors. I think this rate has gone up with the idea that central banks will be raising interest rates in the not so distant future, perhaps as soon as this spring, maybe March. So the market has definitely been on edge. We've seen tech stocks sell off quite often over the last few weeks. Do I think this is justified? In my opinion, I don't believe so. And I think if you see these sectors sell off because of a higher 10-year government bond rate, especially if they're good quality companies, and especially if they pay really good dividends, I think this would be a buy opportunity. The buy the dips mentality, in my opinion, over the next month or two still will work. And I think individual investors should look for these opportunities to get more money to work for them. A topic that I don't feel markets are focused on as much any longer is COVID-19. Now that may come as a surprise to many people watching this video, but overall, I think the business community has looked beyond COVID, has looked beyond Omicron. I think many people in the business community believe that this variant, even though it is more transmissible, is a lot weaker. And I think the market knows this. We've already started to see peak numbers out of the UK, certain places in the United States, and South Africa hasn't really had much in the way of COVID, Omicron over the last bunch of weeks. So going forward, I think this market is focused on what corporations will do, what the economy will do. And if you disagree with my opinion, just look at the Fed. Would the Federal Reserve be considering raising interest rates 3 or 4 times in 2022 if they thought that Omicron would continuously be an issue? So I think the market is looking ahead. They're looking ahead to a hotter economy. They're looking ahead to better days. And because of this, I do not feel the market is focused on case numbers or hospitalizations at this time.